Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Thursday, the 29th of August. I'm Daniel Lam, your host for the podcast. One of the sharpest trends over the last few months across major asset classes is the depreciation in the US dollar. The DXY index has dropped by more than 5%, trending quite smoothly down to close to the 100 mark. The softening in US macro data prompted investors to raise the probability of a Fed pivot. Now that Powell has pretty much, quote-unquote, sealed the deal with his speech at Jackson Hole, how much is in the price on the weakening of the US dollar? Well, our view is that there is limited downside for the US dollar at these levels. Our base case is a soft landing in the US economy. So this, together with FOMC rate cut, would likely drive risk premium lower across many markets. But it seems that the markets have priced in a soft landing scenario, with US rates and US dollar sitting at multi-month low, while US equities is at its high. So this will give room for the Fed to, so to speak, go light in September, starting with a 25 basis point cut and a dovish message, rather than alarming the markets with a 50 basis point move. There are also clues offered in the technicals on the DXY chart as well. It has been weakening on a downtrend and making new lows, but the relative strength indicator, i.e. the RSI, has been holding up and not going lower. Now, long-term followers of this podcast would be familiar with this analytical technique. So this shows the selling strength has not been increasing despite the index making new lows. So technically, this suggests that the index is in the process of forming a bottom. So don't be surprised to see the US dollar rebounding in the very near term. But would there be a more sustained rebound in the US dollar? Well, that would require the US economic data to weaken sharply, such that fears of hard landing returns to the markets. A US recession would likely drag the rest of the global economy into a meaningful slowdown. So in that scenario, we would expect the US dollar to outperform on a safe haven demand status. That is a risk that we should be watching out for, but so far there is limited evidence of such happening. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.